So, you're welcome once again for our lecture. And today we want to consider the computations of personal income tax based on Finance Act 20. Finance Act 2020. And that is payee tax assessment. And we shall be considering the following under these subjects. Number one, look at the meaning of personal income tax. Two, look at classifications of income chargeable to tax. Number three, look at benefits in kind. Number four, look at tax exempted deduction. Number five, we look at calculation of consolidated relief allowance. And number six, we consider tax rate. And number seven, we treat illustration or example as live questions. So, under these computations of personal income tax based on Finance Act 2020, we shall consider number one, the meaning of personal income tax. Two, look at the classifications of income chargeable to tax. What are those incomes that should be charged or subject to taxations? And then we'll look at benefits in kind. This is part of the earned income that a staff or employee enjoys. So we're going to look at the contents of the benefit in kind. And then we'll look at tax exempted deductions. What are those tax exempted from deductions? Then we'll look at the calculations of the consolidated relief allowance, that is CRA. And then we'll look at the tax rates. And finally, we'll look at life question or problem to solve. So we'll look at this one by one. Let's start with the meaning of personal income tax. Personal income tax, the meaning. Personal income tax includes the following. Personal income tax includes the following. Number one, it includes taxation of employee. Number two, it includes taxation of sole trader. Number three, it includes taxation of partnership. partnership assessment. Number 4, it includes estate settlement and trusts. So the personal income tax involve these taxes. Number 1, the tax of employee or staff. Number 2, it deals with the sole trader. Those with that sole traders are businessmen. And it looks at the taxation of partnership, the people that make up the partnership. And then we look at the estate settlement. Now we look at the personal income tax chargeable. What are those incomes that are chargeable, that should be subjected? That takes us to number 2, the personal income tax chargeable. Personal income tax chargeable. Income tax chargeable to tax. Income chargeable to tax. What are those incomes that should be subjected or should be charged on the taxations? Number 1, there are 2 basic type of income. One is earned income. Number 2 is unearned income. Now, these are the 2 classes of income, the earned and unearned. So let's look at them one by one. When we look at talk about earned income, we are looking at the income that has to do with the employment, that has to do with income from trade or business. That is, let's take them one by one. Number 1, income earned income. And the income earned income includes the following. This includes the following. Number 1, income from trade through business. Now, this one here, income here, this is treated. This kind of income is treated in taxation on the preceding year basis. Treated on the preceding year basis. That is PYB. Now, the second one is income from previous employment. Income from previous employment. Income from previous employment. Example of this kind of income is gratuity. Gratuity. Now, this gratuity is a sum of money given to a retiring staff who has served in organization for several number of years. At the point of exit, this money will be given to him in a lump sum. And that's gratuity. Is the income from the previous employment. Now, and the third one is employment income. Employment income. All these are under earned income. Employment income. Employment incomes includes the following. One, salary. The staff is earning salary and wages. Two, it is straight taxable benefits. Taxable benefit. These are the benefits that a staff enjoy from the employers, and we call them benefit in kind. Benefits in kind. BIK. Benefit in kind. What are these benefit in kind? That apart from the salary that the employer pays to the employee, number one, this could be accommodation, provision of accommodation for the staff. Two, could be domestic servants. There are some organizations that give their managers or the highly placed employee domestic servants. And this might be the gardeners, it could be the houseboy or housemates, and they place them on salary. They pay them salary. The other one is the use of assets. Use of assets acquired by the employer. Example of this is it could be furnitures, it could be motor vehicle, furnitures, motor vehicle, furnitures, and so forth. So these items falls under benefit in kind. Now, if it is accommodation is charged based on the rentage, the annual rentage of that accommodation. If an organization give its staff, employee accommodations, and in taxations, personal income tax, we considered the annual rentals. How much did you pay for that accommodation is considered. Number two is also another benefit in kind. Domestic servants, it could be security, it could be the house helps, housemates, and the salary that is paid to these domestic servants are considered in the computation of the personal income as benefit in kind. Another one is the use of the assets acquired by the employers. Example of such is motor vehicles, furnitures, and so forth. And this asset is also charged under the treatment of the personal income tax. Once it is charged on the actual costs of that asset, 5% is charged on that asset and then charged to the employee computations of personal income tax. Then we look at unearned incomes. Unearned incomes. Unearned incomes is different from earned income. And these are the income that comes in from the investments that this employee of this fellow invested on. So unearned income. These are the income income employee or individual gets from investments. So example of this is example of unearned income include the following. One, rental income. Sometimes this person has invested money to build um, a house and then give it out on rentage. So the money that comes from there is unearned income. Number two is dividend. These dividends could be from the investments, buying shares from others' company. Number three is interest. Number four is royalty. And number five is it could be income earned from trademarks or what we call patents. Right. These are the group of income that falls under unearned income. So let's look at the basis of assessment. The basis of assessment. What are the bases we need to use for the assessment? So we're looking at basis of assessment. What are the basis of assessment? Number one, income from trades. Income from trades and business is charged on the preceding year basis. Year basis is what we call BYB, preceding year basis. Now, number two, employment income. This is charged on the actual year basis. AYB, actual year basis. As long as employment income is concerned, you are looking at the actual for that year, while the one of the trades or business is being considered on the preceding year, the previous year assessment. Now, unearned income is charged. Number three, unearned income is also charged on the same way that the income of trade. So it's charged on preceding year basis. So we need to understand this principle, because as we get to the calculation or the computation of the rate tax, all this need to be considered based on the laid down rules. So we are saying that the basis of assessment, we have three here now. Number one is the income from trade businesses, which is supposed to be charged on what? On the preceding year basis. The previous year is being charged for this year. Then the employment income, this is charged on the actual, the same year of that income is charged to the tax. And then on earned incomes is being applied the principles or the rules that applies on the trades and businesses. So they are charged on preceding year basis. Let's move on. We want to look at tax exempted deduction. What are those things that need to be deducted or need to be exempted from the computation of the personal income tax. Number one, okay, we're looking at the tax exempt exempted deduction. Let's look at this. Number one, there are looking at the Finance Act. It actually categorizes and spells out those items that need to be exempted or need to be deducted on tax before we arrive at the tax chargeable or chargeable tax um, amount. So is what we call number one is N number one is national housing contribution. National housing contribution, and this is done in 2.5% of the monthly salary of the staff. In fact, this is based on, if you look at the look at this LFN 204 Law of Federals of Nigeria 2004. It is spelled out what needs to be deducted, and that is 2.5% of the monthly salary of the staff to be deducted and then pay into the National Housing Fund contribution. Number two is life insurance premium. This is also exempted. Number three is the national pension scheme. National pension scheme, and this deducted on 8% of employee monthly emoluments. And what constitute a monthly emolument is number one, basic salary of the staff. Basic salary. Two is the housing allowance. And number three is the transportation. Transportation of such staff is put together to calculate 8% and should be paid to the pension schemes. Number four is the gratuity. We talk about this gratuity, and it is a lump sum paid to employee that is retiring after several years of service in that organization. So it is considered. Another one that is very key that is also exempted is that's number five, is what we call national health insurance scheme. So this one here, we have the law state that an organization which have at least 10 staff should be considered under the national health insurance. Let's look at the contents. Now, in the federal level, that is public service. Public service, it is expected that the employer will pay 3.25%, while the employee will pay 1.75%. And this will give you a total of 5%. This is expected to be paid. Then for the private sector, and other tiers of governments, these are the pay. Under here, employers is expected to will pay 10%, while employee will pay 5%, and that will be 15% altogether. So 15% of this need to be remitted to the National Health Insurance Scheme. Let's look at consolidated relief allowance. We should remember that before now, or the advent of this law or the Finance Acts, there were some things that we were considering before the tax of employees arrived at. We used to know what we call by children's allowances, then dependent allowances, and wife allowances. But the Act here now has collapsed it and called it consolidated. So we're looking at consolidated relief allowance. Consolidated relief allowance. So this allowance replaces children allowance, dependents allowance, etc. So in the computations, the law says that the highest of 200,000 naira, the highest computation, the highest, the higher of 200,000 naira, or 1% of gross income, whichever that is higher, you consider it and take it, then plus 20% of gross income. So that means that for you to arrive at this consolidated, you need to calculate the 1% of the gross income, and then you compare the gross income, the 1% of gross income, and 200,000 naira. Whichever one is higher, then you add 20% of the gross income to that one that is higher. Let's look at the computation now. What is actually small, but let's see how we can manage it. The computation, the format for computations of the personal income tax. Computations. Look at this. The format. Computation of personal income tax payable for 20 year of assessment. So it means that by the time you want to compute the actual or live questions or solve live questions, you need to consider the year of the computations and then put the name of such individual or staff. That names will show whom you are computing this personal income and the particular year that you are computing this personal income tax. Here is amount column. Here is amount column. The first thing you need to consider is the end income, as we have discussed previously. Earned incomes. What's make up the earned income? Number one, income from trade or business. Number two is gratuity. 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 Number three is employment. I've discussed this in the previous lesson. Employment income. This is done on what? Actual year basis. But this is done on preceding year basis. So we compute that and add here, we get this. Then you now consider your unearned income. Unearned income. Unearned income is dealt with on preceding year basis. Your earn. This might include rental. Don't forget that this rental income received should be on the cross. Rental income, this should be on the cross income. Bring it here. Then dividends received, equal cross it, and then bring it. Then next one will be interest. Interest received, also cross it. And then the next one may be royalty, depending on what comes in, royalty, and then patents and so on received, all cross it. Then you add this, bring the total here under the total column. add this. Then the next one is for you to less non-taxable income. Less it from here. Then the next one will be less tax exempted. Tax exempt items. List them down if possible. National Housing Fund, National Housing Fund, National Pension Scheme, Life Assurance or Insurance, National Health Insurance Scheme, and then you add this and bring it here. It's a subtraction. Then you calculate your gross income. This now form your gross income. Now, because the board is small, I want to take up the gross income. The gross income, bring the gross income up. After you have deducted the tax exempts from the total, you have your gross income. This and this is your gross income. Then after the gross income, the next one is to less your consolidated relief allowance, CRA, less consolidated relief allowance. Don't forget the computation of it. You compute it, the higher of 200 or 1%, then plus the 20%, you bring it down here. Let's assume that you have computed. So this will give you, the balance here will be your chargeable income. Now, when you get your chargeable income, the next one is to compute the personal tax based on the rating. So the next one will be tax, let me say, personal income tax rate. Income tax rates. So now the rates is from 7% to 24%. It means that the first 300,000 naira will be on the 7%. Next 300,000 naira, depending on the balance, will be 11%. The next 500,000 naira should be 15%. Then the next 500,000 naira again will be on the 19%. While the next 6 will be times 21%. Then above 1.6 will be times 24%. So that is the format. Let's look at the question now. Life questions and solve life problems. The question is, Mr. Chukwudi Okafor, let me write it. Illustration 1. Mr. Chukwudi Okafor is paid 6.5 million as an annual salary as at 31st December 2020. Chukwudi has 2 children in school. And also, Chukwudi is entitled to 2 domestic servants at 200,000 naira each. Also, he has 1 security man with a salary of 150,000 naira. The company gave him a accommodation of an annual rental of 250,000 naira. Chukwudi is also entitled to a car. Worth 30,400,000 naira. Chukwudi also have an aged mother with 30,800 naira for the aged mother. That is dependence allowance. And then he paid life assurance of 48 naira. But note that dividend He received dividends at net. Dividends received net of withholding tax. It means that this tax have been deducted directly from the company. So it will be entitled to 90% of that dividend. Now the question is this. The person that is involved is Chukwudi Okarafo. And we are told that his annual salary is 6.5 million naira as at 31st December of 2020. He has 2 children in the school. He has 2 domestic servants placed on 200,000 naira each. He also is entitled to 1 security man with a salary of 150,000 naira. And then the company gave him accommodation. And the rent for the accommodation is 250 annually. Then Chugodi was also given a car worth 3,400,000 naira. But then we are told that the 8th mother, independent relatives, was earning 30,000 naira. And finally, we are told, before then, life assurance premium is 48,000 naira. And the dividends that Chugodi received was net and not cross. So we need to cross it and know exactly how much he is entitled. Let's go into the computations of these live questions. Don't forget that you are required. The question is asking that you are required to compute is tax payable for the relevant year. Tax, you are not told which year. So let me put there, you are required compute is tax payable for the relevant year. Look at this now. Relevant year. You are not told the particular year, but if you go to the questions, you know that when you are asked to prepare this account or this tax, it is on the year 2020. So that is the relevant year for the computations of this personal income tax of Mr. Chugudi. Let's go into the calculation. The calculation or the computations of the personal income or tax chargeable on the income of Mr. Chugudi. Let's go. I hope we're set. So, I'm sorry, it's a part of that question I've not computed. And we are told that dividends that was on net, this was paid. Dividends was paid. It's part of the questions. The first one was paid on 5th July 2019. And the amount was 99,000 naira. The second one was paid on the 5th of August 2019. That was 63,000 naira. And then the next one was paid on 30th of June 2020. And that was 90,000 naira. Then finally was paid on 31st December 2020. How much was that? 95,000 naira. Remember that this kind of income is charged on the preceding year basis. So since we are computing for the tax on the 2020, so it means that the only one we are going to consider in this computation will be the one that was paid in 2019. These two will be considered. These two, 99,000 and 63,000 naira. And that will give you about 162,000 naira. So this is the one we are going to consider here. Let's go into the computation. The computations. Hope we are following. The computations. Mr. Chukwudi Okarafor. Computation of personal income tax payable 2020 year of assessment. Two naira sign. Number one, following our format, end income. The end income is what? We have the salary. How much was salary? 6,500,000 naira. The next one is benefit in kind. Benefit in kind, which includes domestic servants. Domestic servants, two of them, 2 times 200,000 naira. And this will be what? 400,000 naira. The next one was the security man. Security man, he was paid how much? 150,000 naira. The next one is accommodation. Accommodation. How much? It was 250,000 naira rental. Then the next one is the motor vehicle. Motor vehicle. Now the motor vehicle, we are told that it will be subjected to 5% on the cost of that motor vehicle. The cost of the motor vehicle was 3,400,000 naira. 10 times 5%. If you multiply that, you are definitely going to have 170,000 naira. Is there any other thing? I don't think there is any, so we need to sum up this. So if you now add all this together, you are going to have 970,000 naira. So add it with this, and that will give you the sum of 7,470,000 naira. So the next one is to consider unearned income. Unearned income. These unearned incomes include dividends. And dividend, we are told that since we are considering it on the one on the preceding year, so that will be that the two, that 99,000 plus 63,000 naira, and this will give you what? Give you 162,000, then times 0.9. The reason why we are multiplied by 0.9 was that withholding tax have been taken care directly. So if you multiply this, you will have the sum of 180,000. Now you can now add this together, and that will give us 765,000. Will give us that, and then this is total. We are told that in the format that we need to less the exemptions. So that means that these dividends need to be taken off. Less dividend of 180 is minus. This will give us 7470. So now at that point, you will also add the tax exempted or less tax exempted, and that is the life tax exempts items. And this is one of them is what? Life insurance. And that was what? From the question is 48,000 naira. So less this is a minus. Plus this will give us 7,422 million. So, and this is now our gross income. These are gross income. Now, because of the limited size of the board, I'm going to bring up this gross income up there so that we can text the CRA and then arrive at our chart table. So let's bring this up, the chart table, gross income. Let's bring it up. Gross income. What's our gross income? Our gross income is 7,422,000 naira. That's our gross income. So the next one is for us to consider our consolidated computations. Let's consolidated relief allowance. Now, don't forget that it is a higher of 200, higher of 200 and or 1% of gross income. So let's look at then plus 20% of same gross income. Let's look at this now. Look at 200 and then the 1%. What is 1% of gross income? 1% of gross income of 7,422. That will give you what? Will be 74,222,000 naira, and which is less than 200. So we are going to consider 200 and then add the 20%. Now let's equally calculate what is 20%. 20% of 7422 will be equal to 1484. Calculate it now. Now, because consolidated is to add the 200 to 20%. So that will be what? What we are going to have as our consolidated will be what? 200 plus 2, 1,484,000 naira. And that will give us 1,684,000 naira. So don't forget that it is a subtraction. You are lessening it from the gross income. It's gross income. So if you less this now from gross income, you are going to have your chargeable. This will be 0 and 0, and this will be 8, and this will be 7,375. So this gives us our chargeable income. Our chargeable income is this. Now that we have been able to compute our chargeable income, we are going to fix it on the rating. The first 300s, we are going to look at the rating, the computation, the actual computation of this. So we are now calculating tax payable. Number one, the first 300,000 naira times 7%. This will be what is equal to 21,000 naira. Then the next 300 naira times 11%. This will give you 33,000 naira. Now the next one, the next 500,000 naira times 15%. So this will give you 75,000 naira. Then the next 500,000 naira times this times 19% will give you 95,000 naira. The next 1,600,000, next 1.6 million will be times 21%, and this will give us 336,000 naira. Then above 1.6. What is the figure? Now, how do you know the above? You add this and add this and add this and add this and add this to subtract it from the chargeable income to know the balance now, which will now use the last rate. So if you add this, this is 1. This is 2 point, that is 3.2. If you subtract from this, you're going to have 2,537,600,000 times 24%. So this will give you 609,024 naira. So if you sum this up now, if you add all of this, you have 1,169,000 naira 424 naira. So this is the tax. This tax. This is total taxable. So this is what Ugochukwu is expected to pay. Now, it is simple to follow up because let's assume that Ugochukwu is just a salary earner without any other these things. It's very simple because this one based on the fact that Ugochukwu were also getting some income from some other sources, apart from the fact that the company was taking good care of him. They gave him accommodation, they gave him motor vehicle, they gave him staff, and they gave him domestic servants and so forth. But then Ugochukwu has also invested his money that was yielding some dividends. So that dividends were all brought together into the cabinet to compute and to arrive at his taxable. And the most important aspect that you need to consider is the consolidated relief allowance. In those days, before the Pre-Finance Act, you discover that the about at least 4 children were entitled to allowances, and then your dependent parents or aged parents who are not working were also entitled to that. But this new act has actually eliminated all those things altogether. So please go through this, listen to it repeatedly, and also try to make sure that you subscribe for the YouTube and check our previous YouTubes on taxations. We have various taxes and the one that concerns the business organization and so forth. So subscribe and then share comments on this. Thank you very much for giving your giving attention to this important lecture. Thank you.